Have you noticed how Bitcoin miners are pivoting like in a pretty dramatic way these days?
Hmm.
Instead of solely mining BTC, they're actually cashing in on AI.
Right. It's like the traditional mining model is no longer as profitable. What's driving this shift?
Yeah, exactly. The 2024 Bitcoin halving slashed block rewards down to 3.125 Bitcoin, which, along with high electricity costs and expensive equipment, cut
Yep.
into their margins. So many companies needed a new revenue stream.
And that new revenue stream is AI, right? They're using GPUs and existing power infrastructures to tap into the high demand for AI compute.
Right? Miners had these energy dense data centers already, so it's like they upgraded with GPUs to support AI training and inference workloads.
True.
In a way, they're leveraging something they already have: energy and data capacity.
Interesting. So it's almost like turning stranded power into stable cash flow.
Exactly. For example, Core Scientific, a Bitcoin miner, restructured after some rough financial patches and then signed this huge 12-year, $3.5 billion deal with CoreWeave, an AI cloud computing company.
Yeah, that's a lifeline.
They shifted focus from just digital gold mining to AI services.
That's quite a turnaround. But wasn't their revenue still lower in 2025 compared to before?
True, their Q1 2025 revenue fell from 179.3 million to 79.5 million, but the AI strategy really boosted investor confidence.
Right, got
The
it.
stock price went up after the deal was announced.
So, Core Scientific is a prime example of a miner using AI to offset Bitcoin halving challenges. What about other miners?
Well, Hut 8 is another great case. They maintained Bitcoin mining while launching an AI venture dubbed Highrise
Yeah,
AI. They offer GPU as a service using NVIDIA H100 chips in a 5-year contract that includes fixed payments and revenue sharing.
so their AI income complements their crypto revenue stream. It's like a backup plan while still keeping the core business intact, right?
Exactly. Even though they mined fewer BTC after halving, their significant Bitcoin reserves and steady AI income help balance things out.
Makes sense. And then there are hybrid models that mix Bitcoin mining with AI compute like Hive and Iron, isn't it?
Yes, definitely. Hive rebranded from Hive Blockchain to reflect its focus on broader high performance computing, investing about $30 million dollars in NVIDIA powered GPU clusters.
Yes, I heard.
Their AI and HPC revenue even tripled in fiscal 2025.
And Iron's story is pretty interesting as well. They started small with GPUs and then scaled up massively, right?
Right. Iran began with 248 GPUs and grew over 4,300 units by mid 2025. They're mining BTC and also generating significant revenue from AI cloud services. But they did face a setback with that class action lawsuit over their Texas facility setup, though.
That's a key risk, isn't it? Diversifying into AI isn't without its regulatory or operational challenges.
Exactly. And that brings us to another point. Major players like Riot Platforms and Mara Holdings are also exploring AI integration while remaining firm on
Right,
Bitcoin
it's like a
mining.
two-pronged strategy. Riot Platforms, for example, is looking at converting 600 megawatts at its Texas facility into high-performance computing infrastructure.
Yeah, their Corsicana site can support up to 1 gigawatt of computing power. And although they haven't landed a significant AI contract yet, their mining revenue remains robust.
Impressive. Mara Holdings is also unique. They have the largest Bitcoin treasury. Their focus on edge computing and developing the Mara 2 PIC 700 immersion cooling system is forward-thinking.
Right, but Mara's AI efforts haven't yielded any significant contracts yet. It's more of a forward looking strategy rather than immediate profit.
Absolutely, the risks there are higher. Then we have Canaan, which seems to be an outlier by stepping back from AI altogether, isn't it?
Correct. Unlike the others, Canaan closed its AI chip division in July 2025, choosing instead to double down on ASICs for Bitcoin mining.
Interesting, but is that sustainable? That's exactly my point. While Canaan is sticking to its roots, it only holds about 2.1% of the global ASIC market. I mean, isn't diversification generally seen as a way to stabilize revenue?
Yes, diversification does tend to cushion risks, especially with volatile assets like Bitcoin. Canaan's strategy is risky.
Right, a bit narrow, I'd say.
And then there are the inherent risks in shifting to AI, substantial initial investments for infrastructure upgrades from ASICs to GPUs, not to mention power supply reliability and cooling challenges.
Yeah, it's like you're trading one set of challenges for another. Those GPUs, especially models like NVIDIA's H100, generate a lot of heat. Inadequate cooling can cause serious um, equipment failures.
Absolutely. And then there's the regulatory compliance side of things. Hosting AI workloads involves navigating complex rules over data privacy, energy use, and even carbon emissions.
Not to mention market competition. As more miners repurpose their facilities for AI, pricing for these services could drop pretty fast.
Right, early entrants might hold an advantage with strategic locations and low energy costs, but the market could get crowded.
Yeah, can't argue with that. And what about client stability? Many AI startups might not have the long-term funding, right?
Exactly. AI clients might be less stable compared to long established crypto revenue streams. This means miners must be extra careful to avoid payment issues or service interruptions.
Definitely a balancing act. Given all this, do you think Bitcoin miners are smarter to diversify into AI or stick strictly to mining?
Well, it seems like diversification is their answer to the halving hit. The steady non crypto revenue from AI offsets volatile Bitcoin earnings.
Yes, practical and necessary. But I wonder if, in the long run, the heavy investment required might overextend their resources, particularly if AI clients turn out to be less reliable.
That's a fair critique. The transition isn't without risk. Big infrastructure costs and potential operational overheads could strain their finances.
I see your point.
So, the big takeaway is that while traditional Bitcoin mining is under pressure from halving and competition, repurposing their facilities for AI is creating a more stable income. Yet, they need to manage new risks carefully.
Yeah, exactly, a double-edged sword. It's a fascinating convergence of two high-energy fields, crypto and AI. And I guess only time will tell which strategy really wins out.